would like to discuss several things within the syndication process, getting prepared, what we need to do. The very first question comes to mind is how much money do you raise from one investor? Why that amount? And also, what expenses do you incur during syndication process as you are putting the deals together and so forth? Definitely want the investor to diversify and not put all the eggs in one basket in one particular market or asset, commercial asset. You want them to kind of divvy it up, put a few thousands of dollars here and some in the other properties and so on. It's best to have them put maybe 300 to 400,000 max in a deal where you are raising maybe $2 million or so, but most of the people would invest about 50,000 to 100,000. Many of them, are really risking that money, as you know, because of the syndication process. As you will see in the PPM, it talks about it all over the place that there are risks involved in any kind of investment in syndication. Could be real estate, could be, you could compare that to stock market and putting the money in the savings accounts or mutual funds, which doesn't bring much returns, but it's less risky. But the high returns like you are going to offer of maybe 8 to 10, 11, 12% cash flow, and on the back end of another 8, 10 or so, so about 19 to 25% return per annum do have risks. So you got to bring that into their mind, why they are investing money and is that the right thing to do. Please be sure to listen to other modules which explain accredited investors, the sophisticated investors, and suitable investors. Because as a syndicator, you have really fiduciary responsibilities and other legal limitations who you can get into your deal. In the PPM, you can set the minimum amount and the maximum amount. Usually we say we'll take 50,000 for smaller deals that we put together, and about 100,000 if you have to raise about $2 million or so. The reason is it takes 20 people. If everybody put in 100 for 2 million, that's 20 people that you'll be dealing with, 20 investors. The best thing is to have as few investors in a syndication deal as possible, because that will help in keeping track with them, doing the meetings and all those things as such. So in the PPM, you can set minimum and maximum. Now remember, you need to qualify as the loan sponsor also for the deal. So in other words, what are some of the expenses you're going to need for syndication? Let's just take an example. What you'll be spending if you were to, let's say you're getting a 120 units apartment building, in an emerging market, and the purchase price is $5 million. So the very first thing you're going to give is the earnest money into the title company within 3 days of the executed contract, usually 1 to 1.5% of the purchase price. Sometimes it can be 2% also. The minimum amount you could really put up for the earnest money is better, because you have more money to spend somewhere else, and also you don't have too much money tied up. Let's say in this case $5 million property asset, commercial asset, $75,000 you put in as earnest money. If you could put 50,000, that'll be great, but sometime if you're in competitive situations and the seller wants to make sure that you will follow through, they might ask for higher earnest money. Second part is the due diligence expenses. That's the one right after execution of the contract. You have about 21 days or 30 days or 45 days. Please be sure to look at that module where I explain all those things so that you could start the due diligence expenses. You're traveling, you're getting the contractor to come there for a day or two to go through each unit. By the way, we do not take spot checking. Never, ever, ever do spot checking, like out of 120 units that you only see 60 or 30 sample units. You got to make sure you see every single unit, because many times the sellers, brokers, and sellers or property managers will show you only the good units, and the bad ones or down units are not shown. And then when you have closed on the deal and you find out that later on, nothing can be done. You gotta hire a general contractor and pay the fees for inspecting and giving you a report. A full due diligence report has to be put together, which you have to give to syndicate in the syndication package as an exhibit to the investors. You need to disclose everything and everything. So usually it's about $35 to $50 per unit in multifamily. Loan application fee is the third one. That is usually 2,500 to 5,000, could be as high as 10,000 also. And that's for the lender. Lender broker will ask for that money up right away as you start the process, because you have to close within 60 days. So several things have to start right away. The due diligence has to take place right away. Within a week or so, you need to make a decision. Is everything okay with the property? All the financial due diligence is done, physical due diligence, roof, boilers, everything like that. And then you say, okay, I'm going to start now the loan process with the lender. And you also pay the money to the syndication attorneys right now. Once you know that you're going to go ahead with the property, then you start giving more money out for the third party inspections, reports, the surveys, the phase one surveys, appraisal, which could be 5,000 to 7,500. All these fees are paid out by you, by the syndicator upfront, to get this whole process going. Syndication and other legal fees could be anywhere from $17,000 to $20,000, about 15 for syndication and a couple of thousand for making entities, LLCs, lawyer fees, and so forth. So as you can see, it's a pretty large amount, almost about 115 to 120,000 that you really need it upfront so that you can get the ball rolling. Now you can see it's very important that the money set aside to be spent and get reimbursed from the syndication money raised, we have always put in the PPM. Like I was mentioning, the minimum amount. Now remember, you are building relationships with your investors, contacts, asking about their goals and needs and getting them educated about your kind of investing in the emerging markets, giving them a lot of education and asking them to look into the articles regarding general solicitation, what's allowed, what's not allowed in that regard. So we all need to get correct paperwork filled out by the investors before they wire or deposit the money into the property LLC or other structure. It's only when the minimum amount has been raised that we can break the account. It's called, the term is break the account, and use those funds to reimburse ourselves and other parties, third parties, and so on. But remember, if you were not able to raise all the funds, or you could not close on the commercial asset, you are liable to return all money raised to each investor, and you lose your monies that you have spent so far for the above mentioned expenses. That is the risk, you and I take every time when we do a deal, when we are becoming a syndicators.